Hey traders, welcome back to Trade Empire. In this video, you will learn our best technique to combine multiple time frames to analyze the chart more clearly. And by combining price action and smart money concept, we will explain that how you can make a top-down analysis to identify the market direction, supply and demand levels, liquidity zones, and trading opportunities from higher time frames. So let's start our video after a short intro. What is top-down analysis? Top-down analysis is a trading technique that combines multiple timeframes analysis to gain a comprehensive understanding of the market condition. If we start our analysis from higher time frames and then zoom into the lower time frames, we can get a major view of market trend and key levels of all time frames. In this video, we will dive deep into all type of time frames to make a well-educated analysis of any chart very simply and easily. But here's a question: why do we need to combine multiple time frames? Well, using multiple time frames can provide us a clear image of the market. And we have three main reasons to use multiple time frames. The first is market trend confusion. Here on the 5 minutes euro-dollar chart, we can see that the market is looking very choppy. And identifying a clear trend can be very hard here, as market continuously violating the structure levels to both up and downside. And it can confuse you to identify a clear one-side trend. But if we zoom into the 1-hour time frame, we can clearly see that the market is in a downtrend, and the chart is much clearer here. So by looking at the higher time frame, we can easily identify the trend and can execute our short position in 5 minutes time frame with full confirmation. But here's an important point. Whenever you are confused about market direction, and you notice that the market is continuously violating the structure and key levels, then you are focusing on wrong time frame. So keep in mind, analyzing in the higher time frame can provide you a clear image of the market, and it will help you to enhance your ability to take more confident entries. The second reason is increasing accuracy. Remember, a minor reaction in a higher time frame key area can be a clear trend change in the lower time frame. So before you place any trade, you should always check that how much space we have until price reaches at the higher time frame demand or supply zone. This will also help us to setting our take profits and stop losses. Look at this 15-minute gold chart. We can clearly see that market is in a downtrend. And we have this fair value gap and this valid order block here. And we are expecting that the price will tap into this order block and give us an opportunity to go short. However, the market suddenly changes direction to the upside. And ignore this order block. And in case you are wondering why this happened, here is why. If we zoom into the 1-hour time frame, we can see that this change in direction could be due to reaching at higher time frame demand area. So always check the higher time frame and see that how much room we have left until price reaches any key level. By doing this, we can avoid this kind of unnecessary trades. Optimizing trade entries. Analyzing multiple timeframes allows traders to identify optimal trade entries and exit points. Now imagine if you were waiting for a pullback at this order flow area and want to open a long position here. But by executing here, your stop loss will be too bigger. So to optimize your trade entry here, you will zoom into 2 times lower time frame and look for any change of character. Then you will execute your long position with low risk and high reward. And finally, you have a winning trade. So now that you have learned the importance of multiple time frames analysis, let me teach you the best technique to combine multiple time frames to get a clear chart analysis. In this section of the video, we will teach you our top-down analysis strategy step by step, which is the process of going through a higher time frame and then moving into the lower time frame to find the best trade entries. We mainly consider 3 types of time frames in our analysis. We start from higher time frame, as here first we have weekly and daily time frame. where we highlight the key levels of market structure. Then we zoom into 4-hour and 1-hour to do our technical analysis, like identifying market direction, liquidity zones, and supply and demand areas on the chart. Then we move into the 15-minute or 5-minute for extra confirmation, like any change of character or any solid entry reason. And then we execute our trade with full confirmation. Now let's move to the real chart examples and understand these concepts practically. Here we have the gold weekly time frame. In this time frame, we will highlight the key levels of market structure, as we are in bigger time frame, so we will only draw the most recent key levels. As first we have this major support level, where price got rejected multiple times. Second we have this level, which acted as both support and resistance, and it will be considered as very important key level. Next we have this major supply level, where price got rejected multiple times. Now, this is the only thing we have to do in weekly time frame. Always remember, the key levels of weekly time frame are very important, because there's a high chance for price to react to them in future. Now, we will move into the daily time frame. In daily, first of all we will adjust the weekly key levels to get the more touches. And then we will look for daily key levels and highlight them. And this was the only thing we have to do in daily time frame. But here's an important point. Always draw the lines at where you get the more touches. Drawing from the bodies of the candle is in priority than drawing from the wicks. And treat the key levels as areas, not a solid line or one solid price. Next, we will learn the criteria to identify the strong key levels in market structure. First, we have the turning points. Turning point are the areas from where market change its direction. And always keep the higher time frame turning points in priority. Because in future, when price come to these areas, there's a high chance for price to reverse from there and give us a great trading opportunity. Second, we have the multiple rejections. When price got rejected from the same level multiple times, it means that the traders took action at that same level different times, making that level more powerful and important. But remember one thing, it does not mean that price will hold these multiple rejections levels every time. When price starts moving in one direction, it will easily break these levels. Now look here. Whenever price taps on our highlighted multiple rejection area, we have to look for some price action and candles behavior. If we look here, we can see that after tapping on our marked area, the price action is clearly showing rejections from this point and giving us a clear buy signal. But if we look here, we can see that there is no rejection from this point now, indicating a trend change in the market. Next we have the both support and resistance level. When a level of market structure acted as both support and resistance, it increases the probability for the price to reject this level in future. Next, recently created or respected level, as the recent levels on market structure are always in priority. It can be a recent support level or recent resistance level, or can be any recent bearish or bullish order block. So now let's move to our analysis. As we have highlighted the weekly and daily key levels, we will now move into the 4-hour time frame. And we will again adjust our levels here. Now we can use these levels into major ways. First, breaking each one into the down or upside indicates whether the supply or demand is in control, and price may continue moving to the next level. And second, we can use these levels as our take profit targets, because there's a high chance for the price to reject from these levels. As the 4-hour is when we fully apply smart money concepts, including identifying market direction, supply and demand areas, order blocks, liquidity areas, fair value gaps. First, we can see that the market overall trend is bullish, and currently market is in a ranging scenario. And this is the recent and very strong resistance area that got respected multiple times. So, we will highlight this area as our major supply. And this was the recent fair value gap. But it has been filled, so we will not focus on it. Now, as price is reaching to this key level, and if it got rejected from here, then it will continue moving upside to this level. And if price breaks through this level, then a strong downtrend will be started. But if price moves up from here, and got rejected from this point, then it will give us a short trade opportunity. But if price breaks through this level, then a strong bullish trend will be started. Now, we will move into 1 hour time frame and continue our analysis. Now we can see that in 1 hour time frame, the market is in a solid bearish trend. And it is moving near the daily time frame key level. And there's a high chance for the price to reverse from this area and change its overall direction. Let's see what happens. Now, if we look closely, we can see that first market grabs the liquidity below this key level. Because many traders have set their pending orders at this daily strong key level. And market just active their orders and grabs their stop losses. And after that, we have this double bottom, as we know that double bottom and double top are the main liquidity areas. So market also grabs the liquidity below the double bottom pattern, and suddenly come back into our zone to go up. And these heavy momentum candles are showing the strength of buyers, and their interest in buying. So now, we will move into 5 minutes time frame. Because we have done our final analyze in 1 hour, now we will take position in 5 minutes. First of all, here we have this change of character. As we know that change of character is a great sign of market trend shift. Next we have this recent fair value gap. It means that the buyers are so aggressive here, and price is moving drastically. Third, we have this order block. Now what we will do is to apply the Fibonacci retracement tool and check if our fair value gap is in discount zone or not. And we can see that the fair value gap is in discount zone. So now, we don't have to wait for price to tap into our order block. We will simply set our pending buy order at the top of fair value gap. Stop loss will be a couple of pips below the order block. And for take profit, you can target the 4 hour time frame key level, or just 1:2 risk and reward ratio for quick profits. And finally, after a perfect top-down analysis, we have a winning trade with high reward and low risk. But remember, all the time the scenario will not be the same like this. But if you have understood this top-down analysis perfectly, you can face any type of market scenario. Just keep trying and keep learning new things. So guys, that's all for today. If this video has provided you some knowledge, please leave a like and subscribe the channel for more trading content.